Hey everybody, it is Jay Soloff, and this is our options trade of the week. First off, this is not one of the trade recommendations from one of my services. This is a trade for educational purposes only. So I'm here at marketchameleon.com looking at the unusual options volume page. I have sorted it by volume. It's a good way to kind of see where the action is. And not quite the massive day of options trading we've seen lately, but still quite a bit of action. It was a Fed day today, so FOMC announcement. We did have the central bank saying they might raise rates a little sooner than expected, but not out till 2023. But that is one of the reasons why we're probably seeing some action in financial companies. The big one here being XLF, also Citigroup here. Invesco Mortgage. So, a few things here related to rates, very specifically related to rates. So we're going to look here at XLF. So it was actually mostly unchanged, but traded about 2.5 times the normal volume, nearly 650,000 options, 67% calls, which tends to be bullish. So I think it's interesting when you see something that is not really moving here and you're having a lot of action one way or the other. So that tends to mean there is some positioning getting in ahead of expected moves. So in this case, looks like something bullish. So what we'll do here is go look at the actual trades and see if that's the case. So here I have gone to the trade screen. I have sorted it by quantity. And this first trade here is probably pretty instructive right away. It's a July 2nd, so not that long, only a couple weeks away, but 45,000 calls, which is a ton. The price paid was the ask price, so probably a buy, almost certainly a buy. Open interest is low, so this is an opening trade. An intermarket sweep means that every available option on every market was purchased. So with the stock at 36.88, somebody bought the 38 calls for 21 cents, 45,000 times, almost $1 million worth of notional. So that means it needs to go to 38.21 for this to break even. Stock again closed at it's about $1 from the break-even price. So interesting. XLF is not something that moves all that much. So this is definitely a bullish trade, possibly thinking that people are going to put money into banks with the potential for rates going up. Although why that would be a short-term trade, you would think if it's about rates over the long term and how banks can make money on more of their fixed income type offerings or mortgages or things like that, you would think that's a longer term thing. So why would it help in the short term? There's a few reasons. I think maybe it has to do with the Fed, how they deal with their overnight lending, and some of what has come out recently is that they might be making changes that'll help banks free up some balance sheet space. So that could be part of it, or it could just be a short-term bet that people think that this news is going to be beneficial to banks and people are going to start buying bank stocks right away. So it could be something as simple as that. Looking at XLF here, so you can see it doesn't really move that much. I mean, it has gone up like most other stocks this year as we've the economy is improving as we've come out of the pandemic or come a long way towards rolling out vaccinations. It's gone up about $10 again, which is quite a bit for XLF, which doesn't tend to move that much. But this is is expected to go, if it goes back to the high here, the 52-week high, then this trade will do well. Here at if it's at the high 38.60, that's it's a 20-cent option that would be worth about 40 cents at expiration. So you technically double your money, which will be around $1 million in this case. So it could be a trade like that. Now these are the sort of trades I do like because you're not risking a whole lot if you're doing a small amount here. So here you can see, and that was 45,000, but actually 113,000 options traded here. So there was a lot more action at that strike. Probably a lot of people buying. It's down to, or it's actually up. It was 21 cents. It's already up to 26.29 is the market. It's still relatively cheap, but I like trades like this because you could simply buy the call. It doesn't cost a lot. If you buy a 5 lot, it'll cost you about $150. So something like that with 16 days to expiration is not a bad risk return. And if you're interested in this sort of thing, we do it in Options Floor Trader Pro. There's a link on this page. We just buy calls and puts. So that's the sort of trade we might make in that service. I will be back next week with another trade of the week.